We welcome our viewers here in Nigeria and around the world to your Business Morning this Monday, the 18th of November. I am Osun. Let's get the new market and business week together. So let's look at what's making the headlines this week. Beginning today, we started with October Consumer Price Index and Inflation Report from the Statistics Office. That's the MBS, kicking off a busy final 2 weeks of the month of November. What do we have on the calendar starting from today? The October CPI and inflation, of course, that is already on the market street. Then we have tomorrow, November the 19th, the October petrol, liquefied petrol gas, that's the cooking gas, household data. All of that will be heavy on the market street tomorrow. Then you have the Bloomberg New Economy Forum holding in Beijing from the 28th to 22nd. And then, of course, Thursday and Friday, you will be looking at the SEC CMC meeting. That's the Capital Market Committee meeting. That's going to be very heavy for those 2 days. The final briefing on Friday, the 22nd. Then we have the final Central Bank Monetary Policy meeting for 25th and 26th. That's next week, Monday and Tuesday. Then you have later next week, as the Central Bank is meeting, then the NBS will be releasing the third quarter Nigeria's GDP output report, a much-awaited economic data. Then, of course, a few days later, we have the first half of the year states IGR, that's internally generated revenue report, also from the Statistics Office. Then, if the Senate keeps their promise, we expect to have the passage of Budget 2020 by the upper House of Legislature. That is expected also this month. So if you look at your TV screen, you're seeing a very busy calendar 2 weeks for the final 2 weeks of November. Quite a very heavy one. So we go to the top of the table where headline inflation came in about an hour ago from the MBS, reading Nigeria's inflation 11.61%. From 11.24%. That's on a year-on-year basis. On a month-on-month basis, inflation between September and October was just between 1.04% to 1.07%. That's a bit of a sluggish move, but on a year-on-year basis, that was much bigger. If you're looking at the headline figure, and that's just coming through on your TV screen, 11.61%. If you look at the food index, which is a major components or the major thrust of our inflation. Food inflation went up to 14.09%. That's from 13.51% on a year-on-year basis. Look at the top right corner, you find food inflation very tepid between September 2019 and October 2019, 1.30% to 1.33%. Flip that over and look at the core sub-index, which remain healthy, as it were, 8.94% reading in September. Year-on-year, that declined to 8.88%. And on a month-on-month basis, it's even better, to 0.74% compared to a higher 0.89%. Let's look at the urban inflation, which went higher to 12.20%. You can see the headline print at the top left corner, and the month-on-month, 1.15% reading. Just a sluggish movement if you compare that to 1.13% in the previous month. At the bottom of the screen, you're looking at rural index for October. Year-on-year reading, 11.07%, and a month-on-month, 0.99%. Just a very small uptick from 0.96% in the month of September. This is some of the stories. And across the state, we have a bit of the breakdown there from the Statistics Office. You can see the states with the highest and the lowest headline inflation reading for the month under review. That's the month of October. So let's take this and a few others to Bismarck Rwane, who is our economic counselor and a member of the Economic Advisory Council of President Buhari's administration. He's also the CEO at Financial Derivatives Companies. Live to us from the studios, our studios at the Nigerian Stock Exchange. This is a macroeconomic conversation with Mr. Rwane. Thank you very much for coming through for this morning.
Good morning, Bosun.
Mr. Rwane, this is the headline inflation, printing 11.6%, just in line with and consistent with what your company, FDC, had forecast. Drill down this for us a little bit more.
Well, it was expected, and there are four components that made this inflation move in this direction. One is seasonality. We are at that period of the year when people begin to buy a lot of things for the Christmas season. And the basket, the food basket, 8% of the food basket is rice. And so what you had, the border closure, the seasonality. We also had money supply saturation because of what's happening with the ban of Nigerians investing in treasury bills. And also we have logistics costs. All of these things put together led in this. So directionally, we've had 2 months of increases, and these increases are quite significant. But the good news is that we have core inflation, which is inflation minus seasonality, coming down. But what is very, very disturbing is the fact that you had food inflation higher, and the month-on-month inflation, which is more current, when you analyze it, it's about 13.69%. So we are in for some hard times. Secondly, the inflation due to the minimum wage implementation and the consequential payments is going to kick in December and January. So you have wage-induced inflation, you have border closure, logistics, you have money supply saturation and lower interest rates, and all of this point to a very difficult inflation picture in the next 2 to 3 months.
If we look at where we are at the moment, and you say we're here for a hard time, inflation uptake has been forecasted by the central bank at the MPC since the middle of the year or so. And of course, other research and investment firms such as FDC are also forecast. What's the level we're looking at, Mr. Wani, to the end of the year, considering the fact that surprisingly core index remain very gentle for the month under review with the data we just have today, both year on year and month on month?
I think what you are going to see is that because of the border closure and rice constituting 8% of the basket, you've seen the price of rice increase. But typically what happens in January is that the price of rice drops. Because the federal government has announced the formation of a committee between Niger, Benin, and Nigeria to patrol the border, the reading out there in the market is that there's a likelihood that the border closure is not going to be extended. In that case, those who have been hoarding and speculators who want to take advantage of this situation and pushing up the price of rice all the way to 27,000, 28,000 naira are going to have to dump their rice very quickly. Because if you don't dump the rice, what is going to happen in January? There's going to be a flood of rice all over the place, and the price of rice could come down to as low as 18 or 19,000 naira. But nobody buys rice in January and February. All the rice is bought as gifts and all that. So that's the good news. But in the month of December, we are going to be paying the minimum wage across all the states. We are going to be paying the arrears across all the states and the federal government. We are going to be dealing with the fact that interest rates have dropped. And interest rates, savings is a function of interest rates. If interest rates drop, then savings will also drop. The other side of savings is that once you reduce the marginal propensity to save, you will increase the marginal propensity to consume. So we are going to be seeing increased demand for fast-moving consumer goods in the months of December and in January. So the picture for inflation, if I was to annualize and actually come up with an econometric model, I would say that inflation could actually increase by as much as 0.5 to 0.8% in the next 2 to 3 months. So I won't be surprised to see inflation hit the 12% mark by January. Then after that, it begins to decline again because in January, prices normally come down and the harvest season begins to kick in, as you know.
Okay, if we take all of this together with, this is inflation data, we're expecting GDP reports next week, then the final Monetary Policy Committee meeting of the year. If you put all of that together and the likely passage of budget 2020 by the National Assembly, the Senate President says that this should be done by November the 28th. Do you think we have enough macro fiscal economic issues to deal with? And what do you think all this will mean for the final few weeks of this year and in the first 3 months of next year?
No, the main thrust of government and the private sector is for growth. Growth is a function of investment. Growth is a function of government counter-cyclical spending, and growth is a function of consumption. All of this have to come together to give you the kind of growth that you... Right now, we are growing at roughly maybe about 2.1 or 2.2%, if I use the PMI figures as a guide. In that case, if we grow at 2.2% in Q3 and grow at 2.2% in Q4, then our annualized growth will come in at about 1.98 or 2%. That's for 2019. But we need to move that needle. We need to carry out some structural changes. We need to have some policy restructuring. And all of this is what the business community, the investment community, the policymakers and the regulators have to align their goals, policies, and regulations to ensure that we jumpstart this economy with a catalyst of investment. And that is what I think will be the main thrust of government in the implementation of the 2020 budget. Passing the budget is one thing. The implementation and the incentives to encourage investments becomes a critical issue, especially now that the president has signed the Offshore Petroleum Act. There's a lot of work to be done there still, but obviously it's a move in the right direction. So personally, I think that we have the economy is challenged, but the policy makers are having to think very deeply about how to encourage investments, because it's only by private investment and public sector participation and incentives that we're going to see the kind of growth that will take us out of the current trap we are in.
Okay, so the government at the center, at the federal level, is scrambling left, right, and center. Then you have the subnationals. So let's talk about the subnationals. And I'm sure you've seen a few of them coming to the stock exchange in recent months, at least since July. We've seen Ekiti state government. We've seen a number of states doing economic and investment summit. The governor of the state of Osun Governor Oyetola was at the stock exchange, I think about a week ago or less than that. So what do you think these state governments need to do? Osun State is planning an investment summit this week. What's your take if you read the economic tea leaves of this state?
Yeah, I was in Benin last week. The Edo state governments, kicked off with a very, very impressive summit. We had Facebook, we had Main One, and we had almost all the innovation-based companies in fintech and technology there. I think what is clear is that the performance of states is quite different from one state to the other. The states that have encouraged investors are having the impact. And what you're seeing right now is that a state like Osun State, it's quite interestingly, Osun State has one of the lowest rates of unemployment in spite of all the problems they've had. The unemployment rate is about 10.54 in 2018, while the national unemployment rate was 23%. What does this mean? It means that there are a lot of entrepreneurs within Osun State. Osun State is affected, whether we like it or not, by the border closure. They have a common border with Benin Republic. They're affected. Osun State relies a lot on tourism. Osun State's rate of inflation, even though unemployment is low, its rate of inflation is in September was 10.54, while the national rate of inflation was 11.2. You can see that difference. So Osun State is investor-friendly, it's landlocked, it has a common border with Benin Republic, but has actually been able to, to surge forward. Its IGR is only about 11 billion naira a year. And so living within its means, encouraging investments, actually getting people. They've floated their Omoluabi bank on the stock exchange. So this is a great move, and it means that the state governments that can be proactive, pro-private sector, pro-investment, pro-market, are going to be performing way, way ahead of others. And what is interesting is that while the national poverty rate in Nigeria, as defined by the World Bank and other agencies, is put at about 40%. That is 40% of the people are consuming less than $1.70 a day. Osun State actually has a poverty rate of about 6.54%. You can see the difference. Whilst Sokoto State has a poverty incidence of about 51%, right? You can see that Osun State is having 6.54. In the whole of the Southwest, the poverty rate is about average of 16%. In the South-South, it's about 24%. So on counts of poverty, on counts of unemployment, on counts of inflation, you find that Osun State, irrespective of the fact that they had some difficult times during the recession, and when their FAC dropped, has been able to lead, has actually been able to surge. So all things being said, all things being equal, we expect that Osun State will roll out a package of incentives, will also go out there to solicit for investors. And I also looked at the number of bank branches, which is another indicator, because the banks open the branches where the money is. And you'll find that 2.53% of Access Bank branches, about 2.4% of GT Bank branches, and also that of UBA are in Osun State, compared to one or two other banks that have only about less than 1%. Why is this? Osun State is also a transit state for trade. You have the Ife University there, you have Osogbo, you have Iwo, you have Ire, you have all of these places. And in leisure, we are beginning to see a lot of activity. Local trade, domestic trade, tourism. And, you have the Ada golf retreat where they have so there's a lot of things going. And Osogbo has a history, very, very, very strong history. And a lot of, if tourism is going to take off in Nigeria and tourism is going to take off in the Southwest, it has to be in Osun State, it has to be in Plateau State, in Jos and Bauchi State. Those are the tourism centers. And obviously, we are going to see a lot of investment in these areas.
Mr. Wadi, how much of agriculture do you think should come into play in this conversation with investors in Osun State, for example, State of Osun, as the state called itself? The latest data, inflation data we have today, month-on-month food inflation on a month-on-month basis was just 2.52% in Osun State. Of course, you have some other states, Enugu, Abuja, and Bayelsa, with a lowest rate of food inflation, but 2.52% for food inflation for the month of October, vis-a-vis the national figure that we're looking at, about 14% this morning. So do you think the administration in State of Osun should drill down on agriculture very much at this conference? How much do you think they should discuss agriculture within mining, tourism, and other trade that you talked about earlier?
I think that, you see, it's quite interesting that you have food inflation that low. Osun State is a transit state for things going between the south and the north, and therefore the investors are going to be focusing on storage. First of all, we produce a lot of agricultural products in Osun State, but the storage facilities is where storage and processing will be the area that investors are going to make a major impact there. So you have cocoa going across, you have things that are going across the border back and forth, you have a lot of food products, and that is why food inflation is at 2%. But if you look at the difference between rural and urban inflation is about almost 10% and urban inflation 11.6%. Therefore, you find that Osun State is well positioned. If its rate of inflation, which shows the changes in prices, is that low, it means that they probably have enough storage, enough processing, and enough transportation network for logistics to handle. And I think that would be an interesting area for agric, because the perishable products in Nigeria and storage takes away at least 30 or 40% of all our production. So Osun State will have to focus on storage, has to focus on processing, and has to focus on distribution. And then the payment system. That's why I talked about the number of bank branches that are there. I think Osun State has a good thing going for it. And it's a state that investors should take a look at, especially when it comes to entrepreneurship. 1, 2, food, growing food. 2, 3, storage of food. 4, processing the food. And 5, packaging the food. That is that. And if you back that up with tourism, you back that up with transportation, and back that up with theater arts and motion pictures and all of that, you now find that you have a very good picture for investors looking forward into 2020 and 2021.
Thank you, Bismarck Rewani. Thank you very much for your due diligence on some of these top stories making the headlines as we start a new business and markets week. Thank you so much, the CEO at Financial Derivatives Company and a member of the Economic Advisory Council. Thank you so much. We'll take a break, everyone. We'll be right back in 2.